This morning, Fed Chairman Jerome Powell decided to pull out all the stops, throwing down a $2.3 trillion gauntlet against the economic catastrophe caused by the pandemic. It was a remarkable move, coming within seconds of the devastating news that 6.6 million more people filed for unemployment insurance last week. And that's why, because of his moves, that the averages were actually able to rally, including a lot of the down-and-out stocks. Dow ultimately gaining 286 points, S&P climbing 1.45%, NASDAQ advancing 0.77%. Without Powell's extraordinary, and it was, I was kind of blown away, so extraordinary announcement, those hideous jobless claims would have pancaked the stock market. We've gone from the strongest labor market in a half-century to one of the weakest in no time flat. But it didn't matter to Wall Street because the Fed's buying all kinds of distressed debt here. Remember, that's that side you don't see that I keep saying is so important. Buying municipals. Ooh, some of those are hurting. He's buying high-yield corporate bonds. That's fabulous news because those were two big pressure points in this rapidly deteriorating economy. But what a difference from the old days. Between the Fed's latest moves and the $2.2 trillion rescue package from Congress and some more that's on the way, it's really clear to me that the policymakers are thinking big. And they're willing to spend big to keep this economy afloat. And I say cheers. Unlike 2007, when the whole federal government was committed to absolutely doing nothing. And you know why? They know nothing. They know nothing. They know nothing. And that button was because they didn't care. They know nothing. They were too busy thinking about who they could punish, not this time around. Well, I'm just saying we are moving aggressively to put money in the hands of the unemployed, the underemployed, the small business person, the person who lost the dry cleaner, the person who lost the barbershop, the person who lost the restaurant. They are being helped here. And we have to do everything we can at the same time to stop the spread of the virus. In the run-up to the Great Recession, our leaders didn't take any action until the financial system had fallen apart. This time they've learned their lesson. They're actually ahead of the curve. Quite impressed. All this stuff is essential. But it's only keeping us on life support. It's not enough to breathe new life in the economy. At the end of the day, there are some things money can't buy, like health. Without a drug to treat COVID-19 or a vaccine that will let us eradicate it, we're not going to get back to normal. We could end the lockdown tomorrow. It won't make that much difference until we get the outbreak under control. I know we can't stay in quarantine forever. That will cause a depression, which is why we need to use this precious time to set up testing facilities all over the country and make billions of masks. How the CDC flip-flop.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.